Live from the Business RadioX studios in Atlanta, it's time for the Exit Exchange, brought to you by XPX Atlanta, dedicated to changing the trajectory of exit planning services in the Southeast. Now, here's your host.
And hello again, everyone. I'm John Ray with Business RadioX, and I am sitting here alongside David Shavzin and Bob Tanksley with XPX Atlanta. David, Bob, how you doing today?
Doing good, John. Good to be back with you. Appreciate all your help and work as we work through each month's radio show.
Yeah, we have. Yeah, go ahead, Bob.
Oh, just ditto that. So helpful here to the chapter. Appreciate your work, John.
Yeah, well, it's a pleasure to be associated with XPX Atlanta and the two of you and a great chapter. I mean, and folks, if you have not taken advantage of some of the great work that's going on in XPX Atlanta, some of the great meetings that are going on, still virtual, but quite interactive. For a virtual meeting. In fact, the most interactive virtual meetings I've ever seen. So if you have not been involved in that, do so. If you don't know about XPX Atlanta, XPX Atlanta is actually leading an exit planning revolution, folks. And that is built on a simple proposition that advisors can create much more value for their business owner clients when they truly collaborate. XPX Atlanta members build professional relationships to guide their clients in business value growth and a more successful exit. For more information, go to xpxatlanta.org. And now we've got a great guest today, Bill Dukes. Bill is a tax partner with Carr, Riggs, and Ingram. Bill, welcome.
Good morning, gentlemen.
Yeah, great to have you. Tell us a little bit about you and Carr, Riggs, and Ingram. How are you serving folks out there? Yes.
So Carr, Riggs, and Ingram, I'll start there. We're a full service CPA-led advisory firm. We're located in 10 states throughout the Southeast, 25 plus markets, but we offer a wide variety of advisory services to clients all throughout the U.S. and really all over the world. We're consistently a top 25 fastest growing firms in the country. My name, Bill Dukes. I'm a tax partner. I'm located in our Atlanta office. I've been practicing about 16 years, each of those with CRI, thankfully. My practice is primarily focused on closely held small businesses on numerous fronts, all tax related, tax preparation, compliance work, tax planning, tax mitigation, do a little bit of transaction advisory as far as, pre-deal, post-deal tax minimization strategies. And then I've also got a little small niche in tax controversy. So dealing with our good friends at the IRS. But practice is basically industry agnostic. And, I specialize, have quite a few professional service clients in manufacturing and distribution, a little heavier in those areas, but I'm happy to be with you guys.
Hey, Bill, Bob here. I think I remember you hearing you say at one point that Carr Riggs has something like 90 or 100,000 clients. That's pretty impressive. I don't know that you're working on all of those, but for the business owners that you're doing tax returns on, what are you guys seeing? Just kind of a high level question first. What are you guys seeing the most important issues or new issues that are coming out that business owners need to take into account based on the last 16 months of bills coming out of Washington, D.C., and then drilling down a little bit closer into home, Georgia? What actions can still be taken from changes that haven't been implemented yet? Kind of a loaded first question, but big picture, what do you see? What do you guys see here and on the way?
Yeah, no, that's an excellent place to start. So it's our friends in Washington have been busy over the last 16 months. We've literally had 4 major tax bills come across in the last probably 12 to 16 months, which I don't know if that's ever been the case. Back early last year when the pandemic hit, there was the Families First Act, which was really the kickoff of all of this COVID stimulus. And that was basically, last year, it extended the deadlines. That was part of the bill, and also had some early relief as far as paid leave benefits, some small employer stuff. Next, we had the CARES Act, which was in March, shortly thereafter. That was more stimulus, and that gave us the PPP, which that's a hot topic on everybody's mind right now. Then, late in December, we had the Consolidations Act, which was more stimulus, tax extenders, and then most recently, less than a month ago, we had the American Rescue Act, which was more relief, child tax credits, some of that stuff. So there's been a lot to deal with and talk about. As far as 2020 tax returns, some of the things that are still out there. Obviously, the biggest thing is individuals have been extended for a month. There's been a blanket extension, so no worries if you haven't filed your 2020 return. We've got until May 17th to pay and file those tax returns. But it's also because of some of these acts, we've got extended time to make things like our 529 contributions, retirement contributions, HSA contributions. All of that's been pushed back to May. So that's really the first order of business is we have more time on some of those things. Something that's been big is opportunity zones for taxpayers. If you are exiting a business, you're likely going to end up with some sort of capital gain, hopefully, rather than a loss. But so there is an opportunity to invest in opportunity zones. They're kind of they've gone unnoticed, but they've worked well with a lot of my clients. You mentioned Georgia. A big part of what we're going through right now is so much of this federal legislation has been passed. But what people don't realize is when federal legislation is passed, that doesn't automatically mean these states agree or conform with that legislation. One example is the feds came out and gave an exclusion to unemployment benefits. Well, we had to wait about a week before Georgia told us that they weren't complying with that. So there's actually the federal saying you don't have to pay tax on $10,000 of unemployment benefits, and Georgia's saying no, you got to add that back and pay tax on that. Same thing goes for things like PPP deductibility. Some states allow you to deduct those expenses. Some states don't allow you. Some states haven't told us whether they're going to allow us or not. So here you can imagine the spot that we're in. We're halfway through tax season. Some states haven't told us exactly what rules we're playing with. So it's been an interesting 2020 filing season, but those are just a few of the things kind of up in the air right now.
So hey, Bill, follow. Oh, go ahead, Bob.
Just a reminder that owners need to stay in close contact. Like you said, 4 major pieces of legislation come out of DC or not. Stay close to your tax advisors.
Yeah. So Bill, actually, follow-up question, one specific thing with all the even still the unknowns. I guess 2 things. Focusing back on the PPP, at least the first round from the CARES Act.
Right.
So a 2-part question for you. You mentioned states not following or maybe following the feds. Are for the PPP and forgiveness, et cetera, is Georgia following what the feds are doing? on the PPP?
Yeah. Well, when you think about forgiveness or not forgiveness, most of that is handled through the SBA, which is the Small Business Administration. So most of that you're dealing with them and working through your bank to try and get that forgiven. But a lot of the states, their hang up is as far as the deductibility of the expenses on that. So,
and is that still up in the air for Georgia?
For Georgia specifically, they have thankfully complied or conformed to the deductibility for the feds. So that's a good piece of news out of Georgia. They did pass conformity bill that allows us to deduct those expenses.
Okay. One more related question, confusion around all of that is, if the loan is not yet forgiven, again, back still to the first round with the CARES Act, what are you advising folks to do? Still just book it as a loan, book it as normal in 2020, or assume it, or just book it in 2020 as if it's forgiven? So the good answer is it depends, right? There's a lot of that. There's a lot of questions surrounded. You're tapping into a very hot topic, which we're dealing a lot with now. For an example, you've got a taxpayer that there's a mismatch, right? They've expended the money in 2020, but they haven't quite yet received forgiveness, or they didn't receive forgiveness in 2020. And so the question it revolves around the timing of when they can pull that loan off the books. And the question, it's all facts and circumstances right now. And the AICPA, our governing body, which does a fantastic job, they've actually reached out to the IRS and asked for more guidance around that specific question, because it has a lot of impacts across the board. That's the thing with a lot of these bills and a lot of these stimulus that I don't think our legislators understand is there's collateral damage, right? So there's you're passing a bill in the midnight hours trying to provide relief for one set of circumstances. But little do you're affecting, these three other things that are all tied together, and it leaves, taxpayers and practitioners in a tough spot as far as trying to determine the right guidance. And the IRS is overwhelmed. They're administering stimulus checks, and they've got their minds otherwise. So I assume we'll hear back to them on that specific issue, but the answer right now is it depends. We're not really sure.
Folks, we're here chatting with Bill Dukes. Bill is a tax partner with Carr, Riggs, and Ingram. Bill, I'm shocked to hear that politicians don't understand the impact of what they're passing. That's shocking news. We'll have to get to that later. But just to follow up on what David asked, so in the absence of AICPA guidance, let's talk about business owners that are aiming toward a transition for their business, a sale. What's the most appropriate way to handle a PPP loan on the financials, in terms of making sure you've got clean financials for that potential buyer to look at? Right.
Yeah. So it's understood, both sides, the buyers and sellers right now, that we're in a state of limbo. How you file your financial statements and how you report your taxes oftentimes are different, right? So you've got treatment under financial standards, which is, you probably heard the name FASB and GAAP and that type of thing. You've got treatment over on your financial statements. But what I deal with is the IRS and reporting tax implications to that legislation. So there could be a situation where it's treated differently for financial statement purposes and different for tax purposes, and it creates a difference that's tracked going forward. But from an IRS and a tax standpoint, what we're recommending to clients is to extend your return or hold off on filing anything tax related until we can get further guidance. A lot of people are in the deal pipeline and, there's not time to wait. But I think it's understood on both sides. Your representatives and the advisors that are advising you through a deal are aware of this issue and, understand the implications on both sides.
So chaos, uncertainty seems to be the bottom line with all this, and you're talking about extending. So we're sitting here April 21. Personal deadlines are extended, then for a month till middle of May, and then their normal extensions will go out several months. So we'll all be dealing with 2020 for a long time. That said, Bill, we know you have a crystal ball. And what are you advising? What should people even do and think about in 2021? For 2021. Any clues, thoughts, ideas?
Well, you're right. You're right. I wish I had my crystal ball with me. It's interesting because it leaves you in a spot of it's not impossible to plan, but the tax landscape is as uncertain as it is, as it's ever been. In my 16-year career, maybe in history, I don't know that there's ever been this much uncertainty as far as what the future holds. My best advice to taxpayers is to have good advisors involved, good tax practitioners, especially in the back half of this year, because as we enter into planning season, which is one of my favorite times of the year, it's really where we as advisors can deliver value in planning before things, fending off surprises and planning before things actually come to fruition. So I would recommend anybody out there listening to be in touch with your tax advisor for the next, until the end of the year. Be running projections. There's a ton of things to consider. It's likely, again, I don't have my crystal ball. It's likely that no major tax reform will happen at this point and be retroactive back to 1/1/2021. Now, they've done it before, so I wouldn't put it past them. But usually you have the rule, the rules you're playing by before they happen, right? And so I would seem it's highly unlikely that later in this year tax reform would happen and they'd go back and change the rules that we've operated under for the first 4.5 months. Not to say that couldn't happen, but I think the reason for that is the economy is still a little fragile, and with talking about doing massive tax reform, the timing may not be right. But we definitely expect. And everybody, all the economists I've heard, that before the midterms in 2022, between now and then, there will be tax reform. And that would impact not 2021 but 2022. All that to say, it leaves us in a spot of uncertainty. I think a lot of things are on the chopping block. I think they're talking about raising rates for higher income earners. So generally, normally it's better to defer income into later periods, but you get to the end of this year and you may be in a situation where if you have the ability to time income, you're trying to accelerate it into 2021 instead of deferring it into a higher tax rate year in 2022. So that's something to look for. Also, they're talking about raising the payroll tax limit from, it's about $137,000 up to $400,000. That would have a huge impact. Capital gains rates, they're talking about raising. I heard earlier today, they're talking about it's very interesting too, the SALT limit, which was a big, the $10,000 limit on deducting state income taxes. They're talking about repealing that, it's kind of counterintuitive because it's hurt the higher income earners because they're only able to deduct a certain portion. But a lot of the politicians in these higher taxing states are talking about doing away with that. So there's a ton of things out on the landscape. I think as we get into late this year, the conversation will get a little more focused, and you should be working with your tax practitioner to kind of dial in, projections and what your options may be as we get into the end of the year, for planning season.
All right, well, this is being recorded, so we're going to come back and see.
Right.
We're going to come back and check you out, man. So, question for you. So sort of setting aside the, all of this, what we've talked about, all the uncertainty, just looking out a few years, and thinking about the business owner who is not in the middle of the deal now, thinking about getting out sometime soon, right? 75% of small business owners are baby boomers. We're all getting older every year, et cetera, et cetera, et cetera. What are some high level thoughts on what to do now, in 2021 to think ahead for maybe 22 or 2023 in terms of, those may be, in the context of COVID or not, but if you're talking to somebody today, what do you advise they think about?
Yeah, no, it sounds cliche, but I think and a lot of what you guys do is bringing this to light is the earlier the better. Building this team, because when the time does come, you need the people in place. You need to be able to act and move quickly. We've got uncertainty now, but we won't have uncertainty forever. So there will be a time when we know what the landscape looks like for the next few years. So my big thing, I tell a lot of my clients, exit planning starts at entity selection, which is basically, on day one, that's the perfect day to start. When you think about starting a company, that's the day to start thinking about your exit. Because there's a lot of things that you can handle up front that will benefit you greatly as you get down the road, no matter what the tax rules are. For example, one big thing that's huge for small businesses is the 1202 business stock, and that's a special incentive that was created to encourage taxpayers to invest in small businesses like we're talking about here. And it provides a gain exclusion from income. You could potentially, start this out and get to the end of the road and be able to exclude a large portion of your gain, hopefully, down the road. And there's very few places in the IRS code that says you can sell your stock in a business and walk away tax-free. But that's literally what's on, that's what's at stake when we're talking about some of these businesses is early. You gotta be build that team and plan early. That way you can capitalize on some of these things. No matter what the legislation looks like, you're in a position to move when the time is ready.
Yeah. Is the 1202 something that people can convert to take advantage of later on after they've started the company?
It's generally original issuance stock. So there are a few carve outs as far as things you can do once you get down the road, a recap or things like that. But this is one of the grand slams in the tax law, where if you're starting out on the front end and you can articulate your goals over the long term, this is one of the things that you can plan around and capitalize on. But there's various things out there that if you plan the right way, if you've got the right people involved from an early standpoint, you can capitalize on and make the end result better for everybody.
Yeah. One last maybe quick one. If someone's going to sell in the particular calendar year, what can't they do within that 12 month period? They could have done prior to it, aside from what you're talking about with the 1202. But are there adjustments from a tax perspective, on gains that need to be done, in a prior calendar year?
That's an interesting question. I mean, we could spend a whole nother. There are a lot of things, especially leading up to a sale. That obviously a buyer is going to come in and do their due diligence and look at your tax situation, and there are things that could end up hurting you in the end. So it's important to have an advisor involved, especially in a lot of people don't think about the state tax arena. As far as a lot of these indirect taxes, sales tax, payroll tax, a lot of those come into play when you're leading up to a potential deal, where it's one of those things of getting your house in order and making sure you're doing the right things that won't hurt you on the back end. But it definitely boils down to having the right people involved, advising you of what to do and what, like you mentioned, what not to do. There are certain things you don't want to file, an NOL carryback 3 days before you're transitioning your business. That could be a deal breaker. So it's all about having the right people involved.
Yeah. No, that's a perfect segue as we wind up here, which is, the advisory team. It's you on the tax side. It's everybody. Having the right folks around the owner early enough to provide that collaborative advice, I think, is the best solution. Certainly, it's what we talk about incessantly from an XPX perspective as we share with all kinds of advisors or to the business owner. So that's great. Appreciate it, Bill.
Absolutely. You never knew tax could be so interesting, right?
Well, you have a talent for making it a little more interesting, Bill. So thank you for that. And we know that we've raised probably some questions here that folks might like to follow up on. So we'd love it if you could give your coordinates, tell folks how they can be in touch.
Absolutely. So generally, email's probably the best. My email address is bdukes, Dukes, and that's at cricpa.com. And the phone number also you could get me at is 770-394-8000. And like I mentioned, I'm in the Atlanta area. We're just on the top end perimeter, but happy to help out however we can.
Bill Dukes, folks, with Carr, Riggs, and Ingram, tax partner there. Bill, thank you so much for coming on.
Thank you, gentlemen. Thanks for having me, Dave and Bob. Keep up the good fight. Appreciate what you guys are doing for small business owners.
Thanks for your time, Bill.
Yeah, appreciate it.
And folks, just a quick reminder that XPX Atlanta is fundamentally changing the trajectory of exit planning services in the Southeast U.S. and doing so by maintaining several core values, including working collaboratively among advisors, putting the client first, thinking long-term, considering the human angle, and always learning. And those are great core values. It's a pleasure to be associated with those. David, Bob, another great show.
Thanks, John. Appreciate it.
Absolutely. Folks, if you're interested in our entire archive of shows, we're up to show number 4, so we've got an archive now. You can go to xpxatlantaradio.com and find those shows. You can also, if you want more information on XPX Atlanta and to connect with one of the advisors there, if you're a business owner or if you're an advisor that's interested in being part of this group, go to xpxatlanta.org. So for David Shavson and Bob Tanksley, I'm John Ray. Join us next time here on the Exit Exchange.